All right, if you're an entrepreneur or you have primarily a commission-based income, then today's episode of the Underdog Coach is for you, because we're going to talk about two common financial pitfalls that many entrepreneurs face and a couple simple strategies to help you avoid them. So get ready. All right, I know today's episode is probably not for everybody, but certainly if you are an entrepreneur or you do earn an income based primarily on commission, then I think this can be very helpful. If that's not you, maybe you know someone who is in that process or in that transition, new to starting their own business, and I think this information could be really helpful for them. So be sure to tag them, share it with them. And hey, while you're at it, if you're watching this on YouTube, be sure to subscribe to the Underdog Coach channel so you'll be notified when new videos are posted. If you are relatively new or you're in the process of making a transition to a commission-based type of income, be sure to check out a previous episode on how to transition to commission-only sales. I think you'll find that to be very helpful to go along with today's episode. But I want to talk about two pitfalls that many people experience, particularly in the first, maybe even several years of starting their business. Or again, if you earn an income primarily based on commission, whether it's real estate, insurance, anything, and there's a lot of people out there that maybe that earn their income that way, and there could be a lot of variations in your income, and so with that can often come some challenges. So I just want to tell you some things that were helpful for me, some strategies that were helpful for me to learn, but also in working with people. These are two pitfalls that I know a lot of people face. The first one is taxes. And you know, if you are a W-2 employee and every week or every other week or once a month you get a paycheck and taxes are already taken out, certainly you feel it. But oftentimes, if you are self-employed, a business owner, again, you earn a commission type of income where you're not W-2'd, oftentimes taxes can sneak up on you. And the reality is sometimes you feel it even more, but when you have to write that check to the government to pay your taxes. And a lot of times when you're starting out in commission type sales or you're getting your business off the ground, a lot of times you're just really trying to get by. You're trying to make ends meet like a lot of people are. And so you really have a tendency, we all have a tendency to want to use everything that comes into our bank account. But the reality is, while there are a lot of write-offs if you own your own business, certainly you want to have a good CPA. You want to make sure you're taking advantage of all the deductions that you can. But at the end of the day, when you have profit and you're making money, you're going to owe taxes. And so this can be a problem because oftentimes people are going, they're working, they're building their business, and the last thing on their mind is taxes because they're just trying to survive. But then all of a sudden tax time comes along, or whether you're already doing quarterly taxes or not, and sometimes you've already spent the money that you owe to the government. And so that's one pitfall that can cause people to constantly be playing catch up because just when they think they're getting ahead, they've got to pay taxes. And one thing I learned is that you don't really want to owe the government. And so you have to pay your fair share of taxes, and that's a whole nother argument for another day. But if there are taxes that are due, you're going to be required to pay them, and so you want to make sure you're prepared. The second pitfall that oftentimes gets many entrepreneurs is income dips. And if you earn commission, if you're a real estate agent or any type of business owner and you have an income that is inconsistent, then you know exactly what I'm talking about. Maybe one month your income's here, maybe you're making $5,000 the next month, then you're making $10,000, then you're making $7,000, then you're making $12,000, then you're making $2,000. Right? And so there can be ups and downs with your income. If you have a irregular income and you have dips, which if that's how you earn your income, then this can be challenging. And this is what I've found is that many entrepreneurs tend to be very optimistic. And that's a great thing. You actually should be optimistic. If you just had your best month ever, you should be you should set a goal to break that record, to go to the next level. It's very good to be optimistic when you're setting your goals. However, when you're managing your finances, I believe it's more important that you look backwards when you manage your personal finances. So you want to look forward with your goal setting when you're setting your goals to try to hit new records. But the truth is, what a lot of people do is, if you just had your best month and you made $25,000 or whatever, and you've hit a new peak for you, what oftentimes people do, and they may not consciously say it, but they begin to then set their budget and they start spending as if they're going to make that every single month. And look, again, it's good to have that belief. It's good to have that mindset. It's good to be optimistic that the next month is going to be that high as well. But the truth is, you should look backwards and set your budget and create a budget based on what's been happening in the past. And then you can adjust it as you move forward. But you don't want to be like Congress and spending future earnings, right? That we don't know for sure if they're going to be there or not. You want to be spending based on your previous earnings over the last however far you want to look back. And again, every business is got different, maybe different periods of time for ups and downs. There's seasonal type businesses depending on what you do, but the concept is the same. Irregular income dips can be a big problem for entrepreneurs. And over time, if you continue to raise the bar, your lows become higher. And if your expenses don't get out of control, this may or may not be an issue. Or you get to a point that your business can pay yourself a consistent salary. And again, this may not be an issue. But for a lot of people, this creates constant stress. Even if they look back and they say, gosh, I'm making plenty of money when I look at my annual income, but yet I'm always stressed. And the reason is because typically we're all like this. And I will tell you, I have an incredible natural tendency to not spend money. And while I really do believe I'm fairly good at not spending money, the truth is, if you put a whole bunch of money in the account that I spend out of, eventually, I believe if you don't give that dollar a name, it will go somewhere. And so what I encourage you to do is to not just, if you have a big month, to look backwards and understand what some of your previous dips look like. And really look at the numbers, and the way to avoid both of these two pitfalls, whether it's taxes or whether it's income dips, is to create a separate account. And I know this is very basic, but it's very important as well, especially if this is a challenge for you, paying the government, paying your taxes, and also handling these income dips. What I would encourage you to do is go open an account. It doesn't cost you anything at wherever you bank, or it could be a separate bank, but open a savings account and just label it taxes. And anytime you have a profit, any given month, make sure to go ahead and put a little bit into that tax fund. Again, you can get with your CPA. That's certainly not my expertise, but you want to get in the habit of putting some money, just like if you were a W-2 employee and the payroll lady is taking taxes out for you. You need to do the same thing for yourself. You need to put a little bit of money. Certainly if you're paying quarterly taxes, that's great. But oftentimes if you're earning commissions weekly and monthly and all that, you need to go ahead and be putting them in that tax account, so when it comes time for you to pay those quarterly taxes, you have money to do it. Otherwise, you're going to be stressed because you don't have the money to pay your taxes because you've spent it somewhere else. So create a tax account. The second thing, create an irregular income account. Call it what you want to, but what this is when you have your big months, you need to look back and realize, what did some of your small months look like? And actually put some of that extra money into that irregular income fund. It's retained earnings so that you can pay yourself later. The reality is, if you earn a commission-based income, that you're probably going to have some low months again. Now again, your low months will get higher the more that you move your business forward, the better you get. But you want to be prepared. If you just had a month that was double the last month's, so often what happens is people are always in catch-up mode. Or what happens also is people go overspend. Because again, even though your last several months may have been 5, 6, 7,000, now maybe you've had a couple months at 14 or 15,000. If you don't do something intentional with that money, it's probably going to be spent. It's probably going to get spent. And so often people begin to raise their lifestyle up to that type of a level. And then when they have another $5,000 or $6,000 month, they have all this stress, even though their income's going up. So create an irregular income savings account separate from your tax account. This is where you're saying, hey, right off the top, I'm going to put some money in that account to be able to give myself some income in my future low months. So when you have those high months, look back and figure out, what do I need to put away for irregular income? Listen, I'm not saying you shouldn't pay down debt. There's a lot of great strategies out there, Dave Ramsey and all that. You want to start paying down debt. You want to do all those things. The challenge is if you take all your extra money and even if you go pay down your debt and then next month you have a low month and you can't pay your bills, then what do? You go get back in debt. So you really need to have an irregular income fund where you put some of that extra income away so that you can use it in the next month or the next couple months. And the best thing to do is look back at your past and give an honest assessment of what your months look like. What are your expenses? See, so often people say, well, I can't, that are self-employed, I can't budget because my income is so inconsistent. The truth is, if you have an inconsistent income, budgeting is even more important than for those that have the same paycheck every single week or every single month. And so this is how you solve that problem, by having a place where you put that extra income that you from your high months so you can use it in your low months. Then you want to have, of course, just like everyone teaches, another savings account, nothing new here, but an emergency fund. An emergency fund is where we have funds set aside for emergencies. Emergencies are unplanned. But what I wanted people to understand is an irregular income account, that is not an emergency fund, because an emergency fund is unplanned. If you have a commission type income and you look at your past and you can see patterns, then you can plan for those patterns. So you want to have a separate irregular income fund for the dips, so you can, and then you want to work towards building your emergency fund. And look, it is a process. You're gonna trip up every now and then, right? But you just want to be working towards this, because if you can, every time you get paid, put a little bit away for taxes, put a little bit away on your high months for your irregular income account. And then, of course, as you've paid down debt and do all that, over time you build yourself up an emergency fund. But even before you get to the emergency fund, make sure in your big months that you're putting money away for those low months. So, hey, I would love to hear your feedback. If you are self-employed, maybe you've kind of been through this journey successfully, maybe you have some other tips, be sure to comment and share. Love to hear your feedback. There's a whole lot we could talk about on this, but these are just two simple, easy, basic things that you can do. But as basic as they are, I believe a lot of people that are self-employed, that are commission-based income, a lot of people don't actually do this. So while it is simple, so many people don't do it. So comment below. Love to hear your feedback. Again, if you know somebody that could benefit from this message, tag them, share it, and I really do appreciate it. Until next time, make it a great day.